surge in interest in ESG or responsible investing really predated the COVID-19 crisis. So prior to 2020, the focus was all on climate change. Everyone was focused on environmental issues. And now, between the global pandemic and the calls for racial equity in the United States and globally, we've really seen a surge in interest in social issues. So the S in ESG, if you will. And I think it's really the combination of those factors that has driven investor interest in this very exciting field.
How exactly, Valerie, do you invest? We've heard some broad strokes about the criteria involved, about environmental, social, governance, and everything else. But how exactly, as a portfolio manager, do you then buy or sell stocks based on it?
Great. So we take two different approaches. First of all, we look at the overall portfolio. And at least for the portfolio that I manage, we seek to stand for a couple of key issues. One is environmental stewardship. The second is corporate ethical conduct. And then we really look at corporate governance. And we seek to measure those dimensions at the portfolio level. So it's not just a question of qualitative analysis, but we actually apply numbers to each of those objectives. And then for each of the holdings in the portfolio, there are generally very stock-specific environmental, social, and governance issues. And we seek to measure and evaluate those as well. So I would say broadly, you have objectives for the overall portfolio, and then also you have targets for the stocks as well that we hold.
All right, Valerie, let's talk about where the rubber meets the road. All of those criteria, all of those considerations, they lead to you buying a stock. What are your holdings that hold the most weight? What are the ones that you have in the portfolio that go in there in larger part because of these moves that they're taking on ESG-related factors?
Well, our holdings vary, as you can imagine, we're an active manager, so our holdings vary from time to time, but we are significantly underweight energy, as you would imagine. In fact, right now we don't have energy holdings, but that's really related to ESG issues as well as fundamentals. You just mentioned the pullback in energy stocks, so we are not exposed to that. We do have significant exposure to technology. And many of the technology companies are actually quite forward-thinking, not just in their business practices, but also in terms of their human capital management strategies as well. So one example there, just to illustrate the philosophy, would be Alphabet, which is the parent company of Google. They are very dependent on talent. And what we found is that they have very rigorous processes for ensuring pay equity across their entire enterprise. I was really quite surprised to see the level of disclosure that they provide on their global workforce, and also the fact that they have a process for ensuring that they pay equitably across all dimensions in their company. So that's an example of a stock that's very attractive for us, both on fundamentals as well as on some of the ESG characteristics.
All right, Valerie, so given all of that, we know technology has been an outperformer. Can you take us through what you feel as though will be the implications for you and your portfolios as we head into a lot of catalysts, including Fed-related events, the election cycle coming up, the technology-led sell-off that we've seen? What exactly does that do to your calculus, and are you worried?
I'm not worried. I am focused, however, really on the second half. And as many people know, the second half is very important because we're going into the holiday selling season. And I think this will be a true test of how consumers are responding to the pandemic and also how companies are responding. And what we've seen, obviously, is the increased penetration of e-commerce, which is inured to the benefit of some companies, much more so than others. And also that will have a cascading effect in terms of payment processing and demand for capacity on networks, et cetera. So that's really what I'm focused on looking into the second half.